Hello, everybody. So today, Nubank reported its Q3 results. And as far as I'm concerned, they are outstanding again. And this stock, this video I titled Chugging Along Steady Eddie, because Nubank is a stock that I've owned for a long while and it doesn't require much following. It's business as usual, it's growth as usual, and this has not changed. And the market may debate valuation on a net income, price to net income basis and all of that stuff, but that's not the metrics that I look at. The metrics that I look at, I'm almost a single metric investor. I look at revenue growth. That's what I care about. I invest in revenue growth. I invest in adoption, in this case, service adoption. And when I see a company like Nubank, I see adoption is not changing, is not abating. It is still the leading fintech app, the leading banking app, fintech bank in Latin America, still leading, growing customers. So quarter over quarter, if I analyze that, that's a 28.5% growth rate. You're actually closer to 30% if you take the number of October 2023, which they reported kind of as a bonus, right? Kind of as a bonus, they reported that this 90 million. So tremendous amount of customers. We saw they had growth up until today. And 89 million, it's got 90 million customers, 51% of the adult population of Brazil, 83% monthly activity rate. I got a few excerpts from the call that I briefly listened to. Looks like Mexico's doing well. So many countries are doing well for them. They have a copy and paste business model in a way, where their success in Brazil, they are copying and pasting it in Mexico and other countries in Latin America, and going through the same process of growth. This is a company where if you look on a Forex adjusted basis, year-over-year growth, revenue growth was 53%, which is in the top of all of the companies that I look at. I mean, granted, it's not 80% like a few very special stocks, but 53% is a stock that grows, say, like a HIMS. It grows pretty fast, and quarter over quarter was 13%. So product adoption continues, as evidenced by the new member signups. It continues, and that's what I care about. They are obviously gross profit is nice at 43%. Net income is nice. This is a company that's getting more and more profitable, and the market typically likes that. Well, in theory, the market likes that. My analysis, I usually stop at gross profit. I want to make sure that they're profitable, because that future valuation will be based on the true economic profitability of a firm. And the true economic profitability of a company, you can only know about by looking at gross profit, right? Net profits is after removing the money that is invested in R&D, the money that is invested in growth, but in administration. So that doesn't really tell us much about the underlying profitability of a business model. So this is a profitable business model, and it's a fast-growing business model, and they have interesting features. One of the interesting features, which is why the stock may seem expensive, if you look at Nubank in certain metrics like price to earnings, for example, is the cost of acquisition. The acquisition cost for Nubank is $7 per customer. It's ridiculous, and some of it comes in the form of discounts and over signups, and only $2 in the form of paid marketing. So, and obviously the average revenue per customer is lower in Latin America than in the US. But even if you were to compensate for the average income differences and the amount of sums moved being much lower in Latin America, even if you compensate for that, $7 customer acquisition cost is unheard of. This is a highly scaled business, right? Highly dependent on the cloud to run. It's an app. They don't have branches. That's kind of your bet. You're betting on the end of branches, the end of traditional banking. People just go straight to the app, never go through a traditional bank. That explains why per month the average customer costs you less than $1. To serve, their delinquency rate is very low. You see well over twice lower than the Brazilian industry, and they are doing very great on the deposits, which means that they are financing their cost of money, their cost of capital is lower than the interbank interbank interest rate in Brazil, at about 80% of the interbank interest rate in Brazil. So strong deposits fund cheaper costs of capital, which then they can lend and they make money through their credit cards, mostly credit cards for Nubank and a little bit of personal loans. They make money that way, in addition to fees and other things that they do. I'm less interested in how they make money for now, because I don't want them to make. I mean, I'm fine if they make money, but that's important for terminal valuation. Me, I'm interested in the growth. I want to see that they grow really fast, that they become the main banking app. By the time they stop growing and start returning capital to the shareholders in the form of buybacks or sillier dividends, if they were to do that kind of return method, by the time that comes, I want to be out of the stock, right? And move on to a stock that's growing faster. I invest for growth and for revenue growth. And, what are some a few facts about Nubank that haven't changed? And quarter to quarter, this is, I think, not going to change. It's this is the easiest stock to check on. Nubank is the best-in-class app in Latin America. It's a loved banking app. They have a net promoter score that is through the roof. We're not used to people loving their banks in the United States or in the West in general, but people love Nubank in Latin America. The marketing is very culturally relevant. They're in sporting events, soccer, and all of that stuff. People love Nubank. That's one aspect. It's a loved bank. Growth is as perfect as can be, 50% year over year, and that was, of course, with the tough environment that we've had over the past year. Analysts, as you'll see in a second, are predicting much bigger growth going forward. The stock is profitable, so it trades at the premium. The market likes that. I personally don't care. I mean, I'd be fine with a stock just having adjusted EBITDA profits, so you can accumulate it cheaper, right? But this stock has gone up quite a bit ever since it reached that net income profitability. In fact, I tried to map it here on the Google stock price. It roughly hit profitability around that area right here, and it went from about $3 to about $8, and it's been profitable for the past 3 quarters. So profitability has really made this stock go up quite a bit. Their underwriting is very picky, right? They have access to so many customers that they can be picky and lend to those who are the most likely to pay back the money, right? And in my view, investing in Nubank is all a question of valuation, right? At $3.50, and when I covered the stock a while back, I remember making a few videos and it was around $5, no brainer, right? Today, a little more expensive, but I would argue still very cheap and still dirt cheap. And, the market is still a little shy in giving the valuation that a company like Nubank should get, given its peers, right? Given the peers. I mean, this is the largest. I mean, this is one of the largest by number of users. One of the largest financial institutions in America, in Latin America, based on the number of users. Right? It's stunning. Right? It just took them, 10 years to reach the level of banks that had been around for much longer than that. Right? That's the magic of growing through an app. You grow so quick when it's only $7 to acquire a customer, you can grow really quickly. And let me just conclude with this. How do I value Nubank? Well, I'm not buying Nubank right now. I find it, it's not that I find it expensive, it's that I look at Nubank in relation to SOFI. And right now I'm putting money into SOFI and not into Nubank, because I think the valuation of SOFI relative to Nubank is a little more advantageous. But it's been a fight over the quarters between SOFI and Nubank. And I because if you adjust for growth, so SOFI is cheaper, but SOFI grows less. But in the way that my framework works is I use this equation right here that I call enterprise value over gross profit over revenue growth. This answers the question: how much am I paying for each percentage point of forward next 12 months growth? How much am I paying for that growth? And of course, a stock that is predicted to grow by analysts at 80% is going to look cheaper on that metrics basis than a stock that is predicted to grow at 40%. But when I typically compare Nubank to SOFI and I adjust for the delta in growth rate between the two companies, Nubank grows much faster, I often get to very similar valuations. Now, because the data is not computed on my usual financial websites that I use, right? The 10Q is not out yet, so we're gonna have to wait a few days to see all of the data computed. So what I did it a little different today. I used the Q3 number and I simply 4x'd it. So it's kind of a screenshot at time. So in reality, if I were to go back and to take all 4 quarters, that number, EV over GP over revenue growth, would be higher than that. That's one aspect. Another thing that I did is I ignored provision for loan losses because I don't have an easy way to add them in this, but there's going to be loan losses, and it's a good idea to remove the provision for loan losses. Obviously, I cannot easily compute those at the moment, and I'm using Seeking Alpha's highly optimistic number. I think 80% is highly optimistic because past 12 months, right, year-over-year growth was 50%. Granted, without looking at Forex, so Forex adjusted, but still, I think 80% is extremely optimistic. I hope they're right because I own the stock, so I hope they're right, but it seems very optimistic. So keeping in mind that this is the Q3 numbers 3x'd, that there's no provision for loan losses, which is not the right way to do it. There should be at least some provision for loan losses removed for revenue. And keeping in mind that I'm using the highly optimistic number, I am getting a number of 0.11. That's pretty darn good. Now, historically, when I've valued Nubank my way, I get something closer to a 0.2, which is often in line with SOFI, like sometimes a little cheaper, sometimes a little more expensive, but it's often in line with SOFI. I've found over the quarters, SOFI and Nubank to have pretty similar valuation when I ask the question, how much am I paying for that future growth? Right now, I'm buying a little more SOFI right now. I've been impressed with the results of SOFI. But I'm impressed by Nubank. Nubank is steady Eddie. I'm just waiting for a pullback. I'm being a little greedy and waiting for a pullback. As a reminder, this is my style of investing. You may say, why does he only talk about revenue growth? Well, I mostly talk about revenue growth because my style of investing is I go in early at the early signs of adoption. I try to get out before the growth slows down, the revenue growth. And Nubank is not showing any such signs of slowdown. So I am riding the S-curve all the way up. Who knows if that journey will be a 10-year journey or a 5-year journey or a 15-year journey. Nobody really knows, but growing customers alone, customer count at 30% year over year when you have 90 million customers, think about that. That's tremendous, right? That's tremendous. If they continue to do this in 5 years, they'll have probably half of Latin America on there. So at some point, that growth will abate. It's just not showing signs of slowdown to me. I'm not seeing any signs. So sleep well at night stock. That's what Nubank is. That's why it requires little following, in my view. I'm very happy to own it, and it's not a source of stress whatsoever. So this is not investment advice, of course, just entertainment. I hope you like the video. It helps the channel out. Please subscribe too. It helps me out and the channel out and tells me to keep going with these videos. Thanks for watching and have a wonderful day.